So what happened was I caught the beginning of the NFT hype. So I launched my own. That did 2.4 million in 18 minutes. And half of that was net profit to me. And then I started that agency probably a couple months after that. And in 6 months, we did $1 million with insane margins. And then we sold that company in 6 months.
Was there anything you could do to mitigate those taxes, or did you just have to pay a big chunk in taxes?
And that's what I paid it all in full, had no strategies and no one in my corner. That's the problem when you're young and you don't have connections, I think. So I didn't know better.
Yeah, and this is the power of being in the right circles and the right masterminds. Because as we know in the lifestyle investor community, tax strategy is just a playbook. If you run the playbook with the best people out there, world-class practitioners, you can pay little to no taxes legally, morally, ethically. It's all by the letter of the law. And I always say, you don't want to tip Uncle Sam. What's up, Sean? Good to have you here.
Good to be here in Austin, in your hometown, man.
Yeah, hometown, home studio. I love that you're here. I love that you recorded a couple of days here in Austin. I know we had talked about me coming to Vegas, but this worked out great.
Yeah, I'm glad I came, man. I got to meet the people around here, got to experience the culture, and it was great.
You know a lot of people. I was blown away with how many people are on your list that quick when you set up a couple of days here. You know some big hitters.
Yeah, 10 people in 2 days and 850 episodes in a year and a half.
Wow. For those of you that are not familiar, Digital Social Hour is one of the top rated, top downloaded podcasts, period, out of all podcasts. Where do you rank now? I mean, I know it's always ever changing, but
it changes daily on Apple Podcasts. We're anywhere from number 1 to 5 in our category. And then overall, anywhere from, I think our highest has been 75th. And right now we're like 140.
Okay. And what's your category that you're always a leader in?
Self-development. But we started off as marketing because that was my main goal with the podcast at first. But honestly, I got bored of just talking money.
Yeah.
That's just one part of life.
So give me an idea of like what it was in marketing that you uncovered, or like why you felt like that was a great niche to start in.
That's how I made my money. So I sold my marketing agency in the crypto space.
Okay.
And that's what I knew. And that's what I was comfortable with talking about. But after 100 episodes of marketing, I mean, you can only talk so much marketing before it starts to hear the same story over and over. And from there, I dived into other topics, which I find interesting.
Yeah. That's really fun. So you sold a company. And by the way, I would like to point out, you became a millionaire at age 24. You're only 27 right now, a multimillionaire.
Yeah.
Really impressive. I'd love to hear a little bit more about that.
Yeah. I'm in between millionaire and decamillionaire. So next goal is decamillionaire and then centimillionaire, hopefully in my 30s. So that's my financial goals. But yeah, millionaire at 24, liquid. I know a lot of people say they're millionaires because their business does revenue, but liquid millionaire in the bank after taxes. That's what I consider a millionaire. So that happened at 24, which is younger than average. And I really had to change my friend circles. So I hang out with a lot of older people and had to cut a lot of friends. And that's the part people don't talk about.
Yeah. And when you say that, it's not that they're bad people, but in a certain sense, I feel like I've experienced this. I'm still friends with a ton of people I was friends with way back when, but I had also friends that I found their influence pulled me down more than lifted me up.
Yep. And it's not intentional on their end. That's the sad part. They're your friends you grew up with, and that's great. But at a certain point, if you're hanging out with them all day, and subconsciously you're picking up on their tendencies.
That's right. Jim Rohn always says that you're the sum of the 5 people you spend the most time with. And so be intentional with who you're spending time with. Like, are you spending time with people that are playing the game of business and life and wealth creation at a higher level, that have values that you embody, that you're aligned with, but you can learn from, right?
Absolutely. And when I came to Austin, you and Brad Waymart were the 2 I spent the most time with this trip.
I love it.
And that was intentional.
Well, I'm so glad that you're here, and we've gotten a chance to hear the first part of your story. So really impressive that you became a millionaire so young. For me, I always tell people my story is interesting because before I was ever a millionaire, I was financially free. So millionaire came later. Financial freedom was first. I had covered all my expenses with passive income. So I didn't have to work. I bought my time back. I owned it. And then only after that, when I had surplus income and I started investing that into other deals, other things, did I become a millionaire. And
Right.
so I had a different path than most. And most people think that you have to, in order to be really wealthy, you have to be a millionaire. No, in order to be really wealthy, you have to own your time. Being rich is having a lot of money. Being wealthy is having a lot of time or owning it, controlling it. And I think that's an important distinction.
Agreed. And also being a millionaire doesn't hold the same value it did when you were my age.
That's right. That's right. We've got some
and-
inflation.
Yeah.
I mean, I don't want to take away anything from a 24-year-old becoming a millionaire, though. So
Yeah.
I mean, that's big time to me. You made another point that I thought is a very important point, which is you had $1 million liquid in the bank, meaning your true net worth. You know, and I know you just bought your first home here 2 days ago, which is really exciting, or 3 days ago now, right?
Yeah, I think we closed on Tuesday. What's
Yeah.
the? I don't even know.
So cool. I mean, I love it. So 2 days ago. That's so awesome. Now, net worth is going to be, you know, your assets minus your liabilities equals your net worth.
Yep.
And for most people, they overinflate their net worth. Like my experience has been when someone says, oh, my net worth is whatever it is, it's always higher than it really is. They're not factoring in the liabilities. They're not factoring in, you know, the debt on their company, or they're overinflating the value of their company or something.
Yeah.
So I like the simplicity of yours. You're like, no, money in the bank. I'm a millionaire because I got $1 million+ dollars. It's liquid. So, you know, that's true millionaire.
Yeah. Money in the bank, crypto, maybe real estate, you could count it depending on how complicated it's structured. But yeah, I don't like when you count the business equity because not a lot of businesses are liquid. You can't really sell a business easily overnight.
That's right. And most people inflate it so much that it's just not real. So if you were to sell your business, someone else wouldn't pay for it what you think most people think it's worth. You know? So that's the, you know, the greater indicator. And so for me, anytime someone says, and remember in Lifestyle Investor, everyone, you know, has to really disclose a lot of their financial information to be able to get in, because we have to vet to make sure that someone's a right fit. And also that financially it's a good move. Like we have people that would come in and pay $55K to be part of our mastermind that financially have no business doing it. They should not be doing that.
Right.
And so we have to be able to say, no, timing's not right now, you know, maybe later. So we do need this. So it's when someone applies, it's a deep dive. And we have people say, hey, I've never shared so much of my personal financial information before.
Their own wife probably doesn't even know.
That's right. In many cases, that's what people say. Like they've never shared this with anyone. And I'm always, number one, shocked and surprised. But number two, I'm like, oh, wow. Well, I'm glad I could bring you into, you know, this space where you're able to do it, because how on earth are you going to be able to make it to the next level if you can't talk about it, or if you're choosing not to talk about it, if it's too taboo of a topic to talk about, you know?
A lot of families operate that way. It's like a shameful topic.
Yes.
Yeah, it's unfortunate.
Well, money should not be taboo. Wealth creation should not be taboo. We need to learn about it. We need to be around others that are doing it. And we need to be, you know, good stewards of our wealth and teaching other people how to do it, right?
Agreed.
Like passing it forward. So whenever someone puts their net worth in my head, like this, I've joked about this before on the show, but in my head, I'm like, okay, it's 50% of whatever you said.
Yeah. Divided by 2.
That's it. I mean, to me, that is the, you know, I think that's probably as accurate as you're going to get. Maybe some people inflate it more, but you know, that's my number. And by the way, some people, maybe they're real exactly at what it is, but I never trust that. You know, liquid in the bank, that's different. You can see it.
Yeah.
So talk through the sale. At any point, did you think maybe I shouldn't sell, or were you just gung-ho the moment you knew that you had the opportunity to be a millionaire, to net $1 million on a transaction? Were you like, all right, let's do it because I can reinvent myself and do something else?
Dude, it was a crazy year. So what happened was I caught the beginning of the NFT hype. Do you remember this year?
Oh yeah.
So I launched my own, which was before I started the agency. That did 2.4 million in 18 minutes. And half of that was net profit to me. And then I started that agency probably a couple months after that. And in 6 months, we did $1 million.
Wow.
With insane margins. It was like something crazy, maybe 60% margin. And then we sold that company in 6 months.
And are you willing to share sales price?
I think I've said it, 2.5 million.
Okay. So congratulations, first and foremost. from a taxable standpoint, was there anything you could do to mitigate those taxes, or did you just have to pay a big chunk
No,
in
and that's
taxes?
why I talked to you at the mastermind about this. I paid it all in full, had no
Oof.
strategies, and no one in my corner. That's the problem when you're young and you don't have connections, I think. So I didn't know better.
Yeah, and this is the power of being in the right circles and the right masterminds and the right communities, being around people that have been there and done that and can advise and can help. Because as we know in the lifestyle investor community, tax strategy is just a playbook.
Yeah.
And if you don't run the playbook, then you're not going to have a good play. If you run the playbook with the best people out there, world-class practitioners, you can pay little to no taxes legally, morally, ethically. It's all by the letter of the law.
Yeah.
And I always say, you don't want to tip Uncle Sam. I'm okay paying my fair due, but you don't want to tip Uncle Sam.
Yep.
I don't feel like they're doing. I don't feel like they're good enough stewards of our money to want to tip them.
That was a big learning lesson because while I was dealing with that, I had put all the money in crypto into Celsius.
Oh man!
So not only did I have to pay taxes on that, I didn't even have the money because I lost it all in Celsius.
Oh no!
So I was still on payment plan up until a few months ago. Celsius released like 30%, like 2 months ago. So that was rough, man.
That is right. That's a big lesson.
Yeah,
learned.
huge
so
lesson.
Did you put all 2.5 there? Well, I guess it's
so
less,
half of
less
it was
taxes.
Net, and then what happened was I put 1.2 in there, and then crypto crashed. So it was already down, like it went down to maybe 400K at one point. But yeah, I lost it all pretty much.
Wow.
So that was a big lesson. And I think I was too careless putting it all into one platform. I should have spread it out more.
Yeah. I mean, the lessons that we learn around investing when we actually lose money are the best lessons. So in the moment, it's horrible. In the moment, the default is I want to blame someone. Who can I blame? Who messed up? Instead of taking ownership, right? Yeah. I've been there, I've done that. But later on, once you get past that blame and you say, okay, let me be a big boy. Let me put on my big boy pants and recognize I made the decision to do this. I made the decision to invest. It is a loss, but what are the lessons learned? I think that's really important. And for me, I've learned the best lessons, the biggest lessons from losses, from losing money, from painful experiences.
Absolutely. Yeah. I like to share my losses too. I think it's important. So that was my biggest loss. My second biggest loss was in Forex. Have you had any Forex experience?
I've not done anything in Forex.
Okay, good.
Yeah, I don't do a whole lot on public equities and public markets. I've had a lot of friends that have done currency trading, and some have done well, and some have really gotten crushed.
Yeah, I mean, here's what sold me because I was into AI. It was an AI trader that would trade automatically and get you like 5 to 10% a month, which is crazy if you compound that.
Well, that's outlier performance right there.
Yeah, so it worked for like maybe 7-8 months straight, and my portfolio was up to nearly $1 million.
Okay,
and then one day it lost everything, every single thing.
That's so tough.
Isn't that crazy?
It works till it doesn't, but that's the thing. Like, the long haul is such a tough thing, and being able to take wins and pull.
I barely cashed out anything. That was a huge mistake. I got too greedy. And one bad news day is all it took to wreck that AI.
Isn't that crazy?
Yeah, just one bad news.
Public markets are very unpredictable. Private markets can be, but they react a lot slower. So there's time. You can make decisions. Maybe it's not as liquid. So, liquidity could be tricky, whereas it's more liquid in these public markets. But for me, the outlying alpha that exists, the above S&P 500 performance just exists so much greater on the private side, on the alternative investment side. We talked about this on your show where, if you look at all the reports, all the people that compile information from the most successful, wealthiest family offices in the world, but specifically also in the US, you'll find that, between UBS, JP Morgan, Goldman Sachs, KKR, I mean, all these groups, and there's a bunch of others that just aggregate, not banks, but other groups that will aggregate private office or family office data. They're generally between 49 and 59% in alternative investments, because the performance of those to the risk is greater performance to less risk.
Right.
And their public equities or stock market portfolio exposure is a much smaller percentage. Usually it's about 15 to 25%.
Yeah.
So that is an interesting, fascinating thing. And that's also, influenced and swayed me in the way that I look at things, the way that I, kind of evaluate deals. But I've learned a lot of lessons on both sides, on the, investing in public equities, investing in private equity. The thing that I'm really proud of, so I've made tons of mistakes, but I've made very few repeat mistakes. And that to me that's the key, because I'm learning lessons every time and I'm finding ways to get better, to get smarter. And my goal is to help educate people in my community on the same thing. How do we get better? How do we get smarter together?
I love that. You just talked for 3 hours about your 7 losses out of 140, which is crazy because you barely had any, but you're even focusing on those with your community, which I love.
Yeah, it's been a really exciting experience we knock on wood, have had a tremendous amount of success. Our deals are going well, trending well, or have finished well as a general rule. And it's just a small percentage. It's less than 5% of the deals that we have done. It's actually less than 4% of the deals that we have done that either A, have gone bad, or B, have hair on them and could potentially go bad.
Yeah. And that wasn't even your fault. It was COVID, you said, for most of them. So
yeah,
you did what you could.
That is right. I mean, some of them, it's like there's nothing you can do. You can't impact what's going to happen in the economy. You can't foresee that. Sometimes it's mismanagement. Usually it's mismanagement. Sometimes it's fraud. That's rare, but it happens. It exists. And, a lot of times it's just market timing and, or a combination of all those. Right. And so, I think we've done a good job of playing on the safer side of things, deals that if they go bad, you can't lose everything. If they go well, you can make an outsized return, but also doing things that are more sure things, right? Versus the speculative early stage type of investments. We really try to follow what the family offices do, which is 1% of net worth being exposed to these really high risk type of deals, angel deals, early, early stage seed round, pre-seed round type of deals. And then the law of numbers should kick in. So if you're going to do that, and if you're going to play the venture game, most people recommend 4 to 10% of your net worth, in venture, but that's, where you're going to be investing in a fund that has many companies, and most will probably go bad, but you'll get a handful that really get the performance of the fund,
right,
and earn the return overall.
Venture got hit hard, right, recently with the valuations I saw, especially tech.
Yeah, I think tech's getting hit hard. Venture as a whole. I mean, there's definitely niches in venture that are totally fine, but I mean, most markets got hit pretty hard. I mean, some real estate markets did, some didn't. I mean, cap rates for sure, have changed, and as interest rates have. Yeah, I mean, this is it. It's understanding the seasons, and there will be more of these seasons, and it's understanding how to perform best in the season you're in and do the best you can to predict or see the signs of the seasons to come.
Yeah, but the skill you've developed is great, because even during recessions, you can still analyze deals and make money.
Yeah, the goal is to find, either A, deals that are so far under market, it's really hard to lose money, and B, recognize the trends of what's happening right now. Right. So what is going to be mainstream that is just trending today? And what can you be on the early side of that wave on without subjecting yourself to too much risk?
Right. That balance.
Yeah. So I think that's really, really important.
Absolutely.
So yeah, it's interesting though, in investing, and you've experienced this too. We'll talk about some of your investments. Like, you learn because you have money in, like you have skin in the game. Well, now all of a sudden you pay attention, right? When you got some money in the deal, when it goes well, it's really easy to kind of be like, oh man, I'm really good at this.
Yeah.
And so the lessons aren't as rich. It's almost like ego gets in the way of lessons. So what I try and do is, at any point in a deal, I've got this tracker that tracks every deal that I do. And I will like anytime there's a learning lesson, I just go to my tracker, I plug it in for like lessons learned. I got a tab, and we've got a mastermind member, Dave Allred, that also does this in he's got lessons learned. He does this at the end of every deal.
Wow.
And I like doing it at the end, but I've learned stuff in the middle of these deals too that I want to capture, that I'm worried with all I have 400 plus deals, so I'm going to forget some,
That's a lot of deals.
So I got to capture it now.
Yeah.
So I do think that's important, but my best lessons, bar none, have come from losing money.
Wow. 400 plus deals. That's incredible that you're able to manage that many.
Oh, it's crazy. And for a while I did it myself. Now I've got a team, and that is helpful. I mean, I don't know how I could do that myself anymore.
That's crazy, dude. Congrats on that.
Yeah.
So is the goal just to scale that?
Yeah. Yeah. I enjoy it. This has become, a hobby, a passion project, and we've gotten good results. And so I want to be able to teach people what that looks like. The track record has been really good. And again, I want to knock on wood because anything can change. Deals, I mean, I fully recognize that more deals are going to go bad in the future. You can't understand everything. You can't know that everyone's, a good actor or a bad actor early on. So as an investor, you're going to experience everything. You're going to have deals that go well. You're going to have deals that go poorly. You're going to have deals that you lose everything. You're going to have deals that you only get a partial return of your investment. You're going to have deals that return nothing, but at least you get your money back. Yeah. You'll have deals that they told you is going to be a 15% IRR, but you only get 8%. You're going to get a little bit of everything.
Yeah.
And the goal, the key here is don't put your emotions in front of logic. Don't get bent out of shape when you lose money. Don't get out of the game because of it. Learn from those lessons. And emotions are going to slow down your ability to think and process. And generally, they're not going to lead to good results.
Right. Yeah. With my house, for example, I waited 2 years to buy it because everyone was saying the market was going to crash. It never crashed.
That's right.
And I'm curious what percentage of your investments are real estate, because they keep saying it's going to crash, but I don't see it dropping in Vegas. I don't know about here.
Yeah, I mean, the family offices, the wealthiest people in the world generally are somewhere between 15 and 25% in real estate. I got started in real estate, so my portfolio is probably a little more heavily weighted real estate. I'm probably sitting around 35, 40% real estate. So I may be on the higher side of that, but I also am on the lower side of public equities. Just because I have found better returns on the private side. I have personally done much better than if you track the S&P 500 return over the last 10 years, 15 years, 20 years. I mean, right now we're on a tear and things look good, but if you balance it out over the long haul, and even over, 30 years, for example, 30 years, I've been investing for just under 30 years.
Wow.
And so if you look at it for that time frame, my private alternative investment portfolio has by far outperformed my public portfolio.
Wow.
And so I have so, or even, it's largely outperformed even just an S&P 500 index. So for me, I've just slowly whittled away from my public exposure, but I'm not against it. I still have, a few stocks. I still have Berkshire Hathaway, so I can go to the meetings. And,
you get invited to meetings?
Buffett. Yeah, as long as you own. Yeah, I mean, there are ways to go even if you don't own their stock, but if you are a shareholder, then that is your ticket in the door.
That's cool. It's almost like a mastermind.
It is. Yeah. Really cool experience in Omaha. I got a chance to do it. Actually, luckily, I got a chance to do it before Charlie Munger passed the year before.
Oh, wow.
Where did I go? Last year. So I was able to,
Yeah, you passed
not this year, but last year. So that was good. And getting a chance to check out Omaha was pretty cool.
Nice. I got to get out there one of these days.
Yeah. So tell me about crypto now. I mean, it sounds like you've had some losses in that space.
Yep.
Are you still bullish there? Are you still heavily invested?
Yeah.
What do you think of Bitcoin?
I'm in Bitcoin, Ethereum, and I did really well with Solana.
Oh, good.
So Solana, I got in super early, and Ethereum, I'm up a lot because it was down to 1,000, I think, last year, right?
Yeah.
So it's already back up to 3K plus, and it was at 4K earlier this year. So yeah, Ethereum and Bitcoin, I feel like you can't really go wrong, in my opinion.
I agree with that. And I would say for sure, I feel that way on Bitcoin. So for me, my exposure on crypto. So the wealthiest families, once again, if you go back to these, reports, a lot of them aren't even in crypto, but the ones that are generally are at about 1% of their net worth in crypto. I know more of the progressive family offices and some of the younger people that have family offices that have
Yeah.
made their wealth at a younger age like you. And a lot of them just, have just really scaled it over time. Some of them are 5 or 10% of their net worth in it.
Wow.
But most are really, in that 1, maybe 2% range. And so that's kind of what I've modeled. And of that, I'm 90% Bitcoin, 10% Ethereum, or 9% Ethereum, 1%, moonshots.
When you were making your first few millions, were you 100% in one industry? Because that's where I'm at. So I made all my money in crypto. So now I need to diversify, but still like 80% of my money is in crypto. You know what I mean?
Yeah. And I think it's dangerous anytime you're pot committed in anything, because if the tide changes, then it can really mess up net worth. So I mean, most people make their wealth via concentration, but they, grow and maintain it. They maintain, grow, and really compound it, have the exponential growth through diversification.
Mm-hmm.
So I did get my start in real estate. And so at one point in time, I was, almost, I was, 90%, 90 some odd percent real estate. And I have, scaled that back down to, probably closer to 35 to 40%. And at some point, I may liquidate my whole real estate portfolio, but for right now, it's probably not the right time, not the right season. But for the right offer, I mean, in retrospect, I probably should have sold the whole thing in 2021 or 2022. I got these crazy offers and I should have listened to, I'm trying to remember who it was. It was Sam Zell, who's another mentor or hero of mine, someone I've followed for a long time because he was early in on the mobile home park business. But I think he's the one that said that if you won't buy it, if someone makes you an offer and you wouldn't buy it for that, then sell it. So
Wow.
I should have sold because these offers were crazy. I mean, these offers were like 5 times the basis I was in.
Damn.
Yeah.
5x on real estate? That's like unheard of in real estate.
I really should have done it, but that's all right. That's a great lesson where I let the tax tail wag the dog. And instead of just selling, I said, well, let me see how I can mitigate the taxes I would pay. And I went down a few different paths with a few different strategies, and I figured out ways to mitigate it legally. And this would have been a great play. But at the time that I then had it figured out, those offers weren't on the table. The economy was changing.
It was that quick.
Interest rates were going up. Yeah.
Wow.
So I really, that a regret of mine is I was, it was too short-sighted. I should have just paid the tax. I was too short-sighted, and maybe there's greed there where it's like I wanted to keep more of it. I want to capture more of it.
Yeah.
And then, it just was trying to optimize and maximize more than was helpful.
Wow. So you wanted to get fully out of real estate?
It wasn't that I wanted out. It was just that the offers were ridiculous. Just ridiculous.
Got it. Wow.
Yeah. So think about if you, and I'll just use examples. I'm not going to use real numbers here, but if you got into real estate and your own dollars are only 10 or 20 million dollars, but you could get 100 million, 120, 130 million on the way out. That's it. Like that was like, it was a huge differential.
Right. Yeah. So you were up 10x.
Yes.
Holy crap. On real estate, I've never heard that.
On many assets.
Yeah. That's incredible.
Blended. Some were higher, some were lower.
Yeah. But for real estate, that's literally unheard of.
Well, and with real estate, what it is, I've been in the business for 15 years, right? I've been buying real estate. Actually, I've been buying for longer than that, but I've been in mobile home parks that long. And so what it is you're at a point where you can use 15 or 20% down to be able to buy these assets. So you're using bank lending or other types of OPM, other people's money to get these. And so your skin in the game is low compared to what you can get. So you got to pay off the debt, on an exit, but the ability to have a huge return at scale is pretty significant. You buy one property, maybe you can make a little bit.
Yeah.
You buy 20 properties. Well, now all the groups that don't want to aggregate from 1 to 20 are in the game to buy your portfolio from you.
I love that.
And so it's, and they're willing to pay a premium because they don't want to do that. They're not going to invest that time and effort into it.
Yeah, that's cool. So you're at the point now where you're just living off your passive income from all your investments.
Correct. Yeah. And really, when I turned 37, so I'm 44. I just turned 44. 2 weeks ago. And when I was 37, that's when we achieved financial freedom. I probably had financial survival income at about 35.
Okay. Yeah,
And
I want to get to that stage because I'm still working for my money. Like I still need to work.
Yep.
I'm not at that point yet where my money can make. I would probably need $250K a year to say I'm free.
Yeah. And by the way, it's great that you know that number, because now that you know it, you can just start, taking steps to get there.
Yeah.
And I think that's great. Like the first step for a lot of people is they accumulate some cash. Maybe they have an exit, maybe they have a big windfall in crypto or something, or some investment that they do, but they've got this starting point. And then from this point, you don't want to be like, you got to be strategic so you don't lose the money, which you've experienced this. Anyone who's invested is going to lose money at some point. That's just the nature of the beast. But the goal is to lose less times than you win, and to lose smaller amounts than you win. Right. And then you win. You might lose a battle here or there, but you don't lose the war. And so, I think it's great that you know your numbers, and then you can just put together, I interviewed a number of people, and one specifically in the Lifestyle Investor Mastermind. I know we've talked about that with you. He said his first time he celebrated passive income was when, and you can go back and check out the Asim Hafiz episode, but he said, I covered my Netflix account. It's like, I celebrated because that was passive income that covered that. And then he just grew it from there. Right. Yeah. So then it was like utilities, car payments, mortgage, so on and so forth. And it just kept adding up, deal after deal after deal.
I love it.
But $250K sounds like a lot more money than it really is. I mean, let's break it down, divide it by 12 months.
Yeah.
And, it's a lot less.
Yeah, because my mortgage alone's $12K a month. I don't have kids yet, so if I have kids, that number probably needs to be higher. But food is like $5K a month, and then travel and everything.
So if you're between 25 and 30K a month, let's just call it, 27K. That's what you need to hit that lifestyle. By the way, it's a lesser amount for your survival income, right? So what's the survival income? Well, your travel would be a little bit less. Your food would be a little bit less, right? So maybe you could live and get by at, I don't know, 75,000, 100,000, not as luxurious of a life as you live today, but a pretty darn awesome life.
Yeah.
Especially if you didn't have to work. Now you hit that one first. So, maybe it's just figuring out how do you get to, 7 to 10K a month. And then from there you get to, how do you get to 27K a month? And it's a game changer, because when earning money shifts and time spent, like working for money, when that shifts from a have to a get to, it's a big difference.
Absolutely.
And I've found that my creative juices just started flowing.
Yeah, because it's not forced anymore. It's only things you want to do.
That's right. That was very powerful.
Yeah, that's the goal. That's for every entrepreneur. That should be the goal.
Yeah. Well, I'm excited about all the cool stuff that you're up to. What you'd said, hey, you became a millionaire at 24. You're a multimillionaire now. The goal here really soon is become a decamillionaire, which is 10 million plus. And then eventually by your 30s, you'd like to be a centimillionaire, which is 100 million plus.
Yeah, I want to hit 30 decamillionaire and hopefully by 40 centi.
Okay.
I know it's ambitious, but
I love it. You got to have big goals to, have big achievements.
But I listened on Sam Parr's podcast. Some really smart guy said you only need about 50 to 60.
Yeah. I mean, if you're doing it right, I mean, you should be able to, I would make the argument you could do it on way less than that. I mean, I think you could live a killer life on 20 to 30.
Okay.
You just have to be smart with how you're cash flowing those dollars, have the right,
Well, with your investments, yes. He was saying 60 on 4% a year, but you're getting like triple that. So that makes sense.
Yeah. So that's cool that, so that's another number. And by the way, once you hit 50 million, you're like at that point considered an ultra high net worth individual. So sometimes you'll see that acronym written out, but 50 mil's that magic number. And then, another category that, you can put next that a lot of people are working hard. We've got a bunch of people in our mastermind that are centimillionaire already, and they want to move to demi-billionaire, which is 500 million.
Oh, I
and above.
haven't heard of that one.
So that's the one right before billionaire.
Got it.
And then really, once you get in the 100 mil, the centimillionaire, when you become a centimillionaire, you probably should start thinking about multifamily office. Some people say 50 million. I think it's probably more at 100 million. And then single family office is probably more like the 500 million. Maybe you can make the argument at 250, 300 million. I still don't think it makes sense. Because the salaries, to run it effectively is minimum probably 3 mil a year, up to 14 mil a year. So I really think it needs to be at like 500 mil plus, maybe even closer to $1 billion.
If you maintain your numbers, you're going to be there, right? In like 20 years.
Yeah. It's not a goal necessarily. If I hit it, I hit it. What I don't want to do, and I shared this a little bit on your episode, on your podcast, but I don't want to hit that number neglecting my family. So if that happens and I become a billionaire, great. But I'm going to make the choice of family and friends and experiences and all that. And if I don't ever hit it, that's okay. That's not the end all be all goal to me. If I end up hitting it while putting time in with family, friends, experiences, travel, all the stuff that I want to do, then great.
Love it.
It's just not, that number. I know to become a billionaire drives a lot of people. That does not drive me. Owning my time really drives me.
Because you could retire right now.
Yes. Well, and I did for a year. I mean, we traveled the world for a year, spent a ton of time in Europe, went to 13 different countries. Wow. I mean, it was an epic experience. But at the end of that year, I was like, okay, I need to do something. Like I'm ready. I'm ready for the next challenge. And part of that next challenge was me learning and me growing in a few areas. And part of it was starting Lifestyle Investor, where I can teach other people the things I've learned. Let me teach you all the mistakes I've made, so you don't have to copy them. You can just learn them vicariously through me. And then, hey, let's learn some other cool stuff together.
I love it. Yeah, I can't wait to be part of it, man. I'm going to apply later this year.
I love it. It's going to be fun. Well, thanks for being on the show. Appreciate you being here. Any words of advice as we wrap things up?
Join a mastermind. I know we didn't really touch on that, but yeah, I'm part of 3 masterminds. I met Justin through a mastermind, and my life has changed through masterminds.
That's right. We'll give a shout out to our mutual friend, Jim Dew. Since we met at one of his events, and think the world of Jim. He's awesome and brilliant and smart and wonderful. And so is his wife, Mimi. They're just amazing.
Saved me a ton of money already.
That's right. And they're really good at tax strategy. I mean, it's just good to have good. He was on my podcast as well. I'm sure he's on yours. I mean, it's just good to have good tax strategy. And they're, I put them, in a top 5 category for that. And then you are in a really high ticket mastermind. So sometimes, it's funny, like our 55K a year price point is really high for a lot of people. And that's intentional. We want to weed people out. We want the cream of the crop. And by the way, if that's not right for someone yet, that's okay. And we have a lower tier mastermind. We have a tribe of investors that's, half the price point. But we are really selective with who gets into Lifestyle Investor. And so it's funny to me when sometimes people are like, oh, that's really expensive. Yeah, it is. But you get what you invest in yourself.
Right.
You joined 100 million, which is a $100,000 a year mastermind. Right. I mean, that's really investing in yourself.
Really, And when I joined, I only had 200,000 in my name. So
oh my goodness. You took half your liquid net worth.
And you got to be able to live with the fact that, because some people join these masterminds and they get pissed because there's no immediate ROI, right? So when I spent that money, I didn't make it back for like 2 years. But I knew that the connections I would make there, I would eventually make it back. And now I made it back tenfold because I still work with some of the guys there that I met. That's
awesome. And that's what it's about. To think linearly, like a lot of people are like, well, I need to get the ROI, the return on investment. And they look at it and they measure it sometimes by like the deals or what. You can knock the ROI out with tax strategy. Like one good tax strategy can save you more than 55K. One good deal that you do can make you more than 55K. One good connection with someone can make you way more than that. And so I don't like the linear look. I like that you have a bigger outlook where it's like, well, in time, that's going to pay off. And I don't need it to pay off right now. Whenever it does, but I know that I'm going to make that money back. And
100%.
that's for me. Like, so now I went through and did an audit of all my masterminds. So I run 2 masterminds and I'm in 14. So
You're in
16
14?
total. Yes.
Holy crap.
It's ridiculous. I don't attend everything because I figured out that I can be selective with what I attend and I can get the value. So if, mine range anywhere from 10K to 55K.
Yeah.
Right. And so for me, I know in one conversation, one mindset shift, one actionable strategy, one networking, situation, one right fit person, like I know that I'm going to get a return. So I don't feel like I have to attend everything.
Right.
I just need to be really proactive at the things I choose to attend.
Wow. I'm in 2 and that's already a lot for me, man. 14 is crazy.
I don't recommend that, but what I do recommend is putting all the time that you can into taking yourself and your education and your network to the next level. And you're obviously doing that. You've been successful at a young age. You're investing your time and your resources in your peer group, in masterminds and communities, in networking, and you have goals. They're laid out nicely. I love it. This is awesome. What a great episode. I feel like you have inspired a ton of people. You've inspired me. I was not where you are when I was 24. So well done. I think sky's the limit. And where can our audience learn more about you?
Yeah,
where can they find you?
Instagram's probably the best. Sean Mike Kelly, and then Digital Social Hour Podcast is a show.
That's awesome. Well, so great to, have you here in person, get some time. You and I, we're going to go grab some dinner now with Brad Weimert and just kick it a little bit before your flight home.
Can't wait. Thanks for having me.
Awesome. Well, I love wrapping up every episode with one question for you, our audience. And that question is this: what is one step that you can take today, right now, towards financial freedom? So living a life by design, not like most people, by default. What is one thing that you can take from Sean today and put into actionable steps in your life to move you in that direction of financial freedom? Thanks, and we'll catch you next week.
Peace.